Good morning, traders. This is Perry Wilkie with StartUpTrading.com. It is 10 minutes till 9 a.m. Eastern Time on Friday, January 24th. So, looking at news for today, basically we have 9:45 and 10 o'clock. So after that, the news for the day is done. That as far as scheduled news, the title of my video is FOMC and Trade Wars. Uh, Again, for the FOMC, I went over this morning a little bit for those who weren't in there. Nothing expected to happen. Uh, Basically until at least June to September of this year at this point in time as far as the next rate cut. So not a lot going on there. However, you have to admire President Trump. Uh, if you think about Paul Volcker, back in you know 1976 to 1980 during the Carter administration when he was just bound and determined to crush inflation, right? Interest rates, if you guys can believe it, for those of you who have a mortgage on your house, it wasn't uncommon to have a mortgage on your house that was between 18 and 20%. So, think about run those numbers with what your loan note is for and see what your payments would be on that sometime. Uh, so as Volcker, crushed inflation back there, I really think Trump, let's face it, he's not worried about getting elected into a second term. He knows for the most part he's got 2 years to get stuff done if all goes well, which would be extremely abnormal for the midterms, right? He could get 4 years out of it, but he knows he's got a 2 year window basically at this point in time for sure, and it's pretty tight. But he wants to bring manufacturing back to America, and he's willing to screw everybody to get those jobs back here. Which sometimes you got to do what you got to do, right? Have a few years of pain, right, for some long-term prosperity. And this is a nation that uh, I can't even begin to phrase what context it is, right? We only care about the here and now. We don't care about tomorrow. That's the one of the big problems with the United States. So I think he's wanting to change that. We'll see how he does. I wish him all the luck, but sometimes you need the pain for a gain, and it looks like he's willing to go down the road at this point in time to get that manufacturing back in the United States. So don't think that is really not going to happen. Uh, I don't put anything past it either way. Right now, that's what he's jawboning with, as we would say, right? So keep that in mind. So, anyways, back to FOMC and trade wars. We know what the FOMC's got going on. Uh, as far as what's priced in the market at this point in time, it's pretty simple. One cut later this year at this point in time, and that's it. Uh, and then as far as you know, the the rest of it is unscheduled headline news risk. So it means again brackets only. I think I beat that dead horse up. So let's look back at yesterday's session, right? As we just sat there, trolling around this 530 on the QQQ. So the NDX was sitting there, right around this 21,925 or whatever, and just going back and forth around it, accumulating under it, on it, and then finally broke above it. At the same time, the cash market, right, the SPX, was at 6,100. You were a little bit under. You went up to it. It was resistance. You come back over it, and then finally you got the break, and then that was the hold. So you finally busted out over 6,100, and then you went back up into the Nasdaq, right? You got that value area fill in the last minutes of the day, literally. And Jack, if you're listening, um, we were talking about your trade management yesterday, and when I was talking this morning. So if you don't mind, give the traders the number of scratches and small gains or small losses that you had yesterday. Uh, to get in a position that you to get that runner at the end of the day, right? you had some, several trades trying to get into that trade, and then you lost or gained, you know, they were basically scratch trades, a lot of them. But then your management style stayed the same, and you kept taking that limited risk for that great runner reward, and it paid off at the end of the day. So if you don't mind, walk us through that a little bit, I think that would be great for everyone. Looking at what yesterday's action did to structure, we have single prints on the Russell and the Dow, so we'll see how seriously trapped and how uh, uncomfortable shorts feel, I guess is what I'm trying to say. Because if they're very uncomfortable, these pullbacks aren't going to result in all of these boxes being cleansed from yesterday. And then on the ES, it was, pretty low here where that single print was in the morning. And then, so as we look at, where we're at, and, take a mental snapshot of this, continuous ES contract. And then, as we look at it, and you can see that we have two untested points of control that were skipped right from the way down. Uh, that when we went back up, they were skipped. So that's 59.50, which, I think those traders below there are just screwed for a while. And then 6,100, which could trade between now and next Wednesday potentially. But as I pointed out, we had if you look at the specific contract and get off the continuous for the ES and look at H25, you can see that we had 13 sessions going, 12 sessions going to the FOMC that we finally broke above 6110. We were between 6110 and 6165 for the most part for 12 and a half sessions. Uh, 11 full sessions and two halves, right? So as you look at what that does and then you focus back in, you can see that a lot of the action was between 61.18 and 61.55 was where all the action took place. So you're talking about a 37-point range that we were in for 13 sessions, basically. I'm not saying that we're going to go back into it, but this was the lead up into that last FOMC meeting, right? And we're right back here again. And next Wednesday is FOMC meeting. We have, you know, today, Monday, and Tuesday is full sessions, and then next Wednesday is that FOMC decision. And we spent basically the entire time between meetings in this, 2-hour bar, if you will, uh, that was the last FOMC announcement for both of them. And if you look, the ES is right back to the top of it. The Nasdaq still has, you know, 325 points worth of work to do to get back to its top, and it's just, basically holding that last swing high from December 26th, right at this point in time. So looking at the overnight action, 17 points. Again, remember, we were stuck in a 37-point range for 13 sessions going into the FOMC last time. So I'm not saying that's going to happen again, but you have to understand, I mean, we get spoiled with volatility. It might be over until FOMC, except the only thing that could save that, right, is some headline risk, some tariff, some trade war risk. Uh, Looking at, what we had, again, you have those salmon run trades that went off of the NASDAQ, tested, 3 different 30-minute bars above it last night, really didn't get any traction. And then we've got what I consider a closing spike base, right? So we've been basically in this spike base from that last 30 minutes yesterday, 21,895, and then up until this blue box. And then for the ES, it's 61.39 up to the top of the box. And you can see that stuck, very technically. Before I get off here, I do want to mention with positioning today, since it is an expiration, on the cash market, and I've marked this up on I have a chart up of the SPX right? And you can either write these on a notepad or mark them off somewhere yourself. But 60.90 to 61.40, right? The 50-point range. That's where the guard bands are for today, unless the VIX can really accelerate higher, you can get below, and then you can see you've got another equal one 5 points under it. So you got a basically 61.85 to 65.90, and 90 would be that first thing. And then on the top side, 61.40 to 61.45. You're talking about 60,000 contracts each way, right? Uh, this looks like a strangle, right, for today. And the same thing, getting over this would require uh, the VIX just to be dropping dramatically. And the VIX can be sold. So what I would expect is if we get down around this 60, 90, 60, 85 in the cash, that the VIX is going to be sold, right? That's going to put a floor under the market, and that's going to, it doesn't mean it's going to have to rise up to the other end, but it means that's the floor. And it's the same thing. I think if we get up around here, there's a high probability that the VIX starts increasing, and you start, you stay between these bands. Uh, so those are the markers. Those are your major support and resistance lines for the cash market today. And then, I'm not going to get in the rest of it. I went over it, some of it this morning, but 51.30 again for today. And then, if we fall out of bed, you could get so 50, 530, I'm sorry, and 525. But 530 is your large gamma spot. So normal trading would be potentially seeing 528 and then potentially seeing 532 half to the upside. So we're basically at the 532 quarter right now. So, 533, we'll see if, there's any, but uh, the VIX is going to need to keep dropping to get really sustain above there. But you can see for next week, the draw is going to be 540. There's over 60,000 contracts at 540 for next week. And if we just keep floating up into FOMC, which is a possibility, uh, this is going to be your wall. You're not getting over this and maintaining more than likely before next Tuesday, and that's where these uh, levels are. Is next Tuesday on this 540. There's 50,363 contracts sitting there for the Qs. So that's your float up uh, option, and then I've laid out the rest of them. So you guys have a great day. We'll see what Jack's looking at, and everyone have a great weekend, and I'll talk to you on Monday.